Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, if you've paid attention to the news in the recent past, you will know that at the end of last week, the new income tax bill was withdrawn. It was introduced first, it was withdrawn because there were a few changes that were proposed. All of that was then reintroduced at the start of the week. It got passed in the Lok Sabha first, and then it got passed in the Rajya Sabha. So we're waiting. Soon it will be gazetted as a new act. But how does this change things for you as an individual taxpayer? There are a few clarifications that have come through that you should pay attention to. Joining me to talk about this is Parizad Sirwalla, who's partner and head Global Mobility Services Tax at KPMG in India. Thanks so much, Parizad, for taking the time. Let me ask you this. It's supposed to have reduced the amount of literature in the original act, which was unchanged, or rather it was changed piecemeal since 1960. So there was this overarching shift. Is it a very material change? Do things change dramatically for the individual investor, or is it small things that people have to pay attention to?
No, let me explain, Alex. I don't think it's a dramatic kind of change, but let me give you a sort of overarching principle and the genesis behind this. First, just to clarify the confusion, as you said, there is an Income Tax Act, which is a 6-decade-old act. It's been in existence from 1961. The first income tax bill, let's call it Income Tax Number 1 bill, was introduced by the Finance Minister on 13 February 2025. And it actually was prepared after investing 60,000 man-hours. It had 23 chapters and 2.6 lakh words. Just to give you a contrast and a comparison, it actually reduced the verbiage in the words vis-a-vis the current act from 46 chapters and 5 lakh plus words to literally half. This first bill, which was introduced in Feb, was then referred to a parliamentary select committee, which went through a 4-month process of intense review and came back with a 4,500 plus page report with 285 plus recommendations. Now, why am I saying all this? And therefore, now we have a Income Tax Amendment Bill number 2, which, as you said, has been passed by the Lok Sabha, to be precise, on 11th August. And just yesterday, the Rajya Sabha has returned it back to the Lok Sabha with a voice note. So now it awaits presidential assent. I'll come back to the individual tax changes, but the Income Tax Bill number 2 is basically a huge reform, but the whole intent is to simplify compliance, make things easy. It's in a user-friendly language. The Finance Minister actually coined an acronym called SIMPLE, based on which the income tax bills had come out. And SIMPLE, as per her, was S for streamlined structure and language, I for the integrate and concise part of it, M for minimize litigation, P for practical and transparency, L for learning, lean and learn and adapt, and E for efficient tax reforms. That's the overall architecture and the thought process behind the introduction of these income tax bills. To your specific question, let's take a look at what really changes from a common man or an individual taxpayer perspective. And mind you, a lot of people are comparing the Income Tax Number 2 bill with the Income Tax Number 1 bill, but it's also important to see what changes vis-a-vis the current act, which is in existence from 1961, and the latest bill, which is now passed. So first of all, this bill replaces this whole confusion which is there in the current 6-decade-old act, where the concepts of assessment year, financial year were used, and sometimes the common man or individual taxpayers used to get confused as to what they would even fill in their challan forms like a tax year. The bill completely does away with this concept and now uses a simple term like tax year, which is very easy, again, keeping in mind the theme of lucidity and simple language. And with this, India joins the League of Tax Jurisdictions, which only use the concept of tax year, so it avoids confusion. Other than that, there is really no substantial changes in taxation from an individual tax perspective if I just compare it with the current Income Tax Act of 1961. So for instance, The choice of the two personal tax regime, the old regime and the new regime, continues. There is no change to any residency rules. Faceless assessment continues. There was a taxpayer charter which was there in the current act as well. It's there in the bill as well, which intends the intention of the income tax department is to help taxpayers in a courteous and a fair manner, a fair appeal mechanism, and treat taxpayers as honest unless they have reasons to believe. Another aspect is, during search and seizure operations, the current Income Tax Act also mostly officers had access to physical records. But of course, in a world of digital assets, one could get into virtual digital assets and, even access those if you're one of those, taxpayers which is subjected to the search and seizure. The income tax bill has really expanded the definition of assets to include all types of digital, assets. And now, if at all there is a search and seizure, it's explicitly clarified that the officers can even go through the social media accounts, your email servers, cloud storage, so on and so forth. And, other than this, as I said, it's largely
Right.
more clarifying
Yeah.
things or making things simple.
So there are